Today I'm going to show you how you can earn over $3,000 in personal checking account bonuses and over $1,500 in business checking account bonuses. And I'm going to try to figure out what a good deal is and what a bad deal is and what the mediocre deals are. Now, the great thing that I like about checking account bonuses is that I think it's much healthier than a credit card bonus. A checking account bonus doesn't create an incentive to spend. So you're not going to have an incentive to overspend like you would with a credit card. And it's not unheard of to earn upwards to $5,000 a year in checking account bonuses. Now, that's not guaranteed, but it is possible. Now, I've selected what I think are great deals and what I think are not so great deals and what I think are mediocre deals, and I'm going to try to reach a consensus. First of all, we need to look at the US stock market returns. This is the S&P 500 index from 1872 to 2024. And it's showing that the average return, when they're averaged out, is roughly 7.1 to 8.6% per year that stocks go up on average. Now, when I did this more recently, and I think I went back to about 1970 or so, a while back, and so I'm figuring probably anywhere from 7 to 13% a year. So that is my expectation for the stock market, 7 to 13% per year. Of course, some years are going to do worse than others. Now, let's compare that to the risk-free rate. Now, what's the risk-free rate? I consider the risk-free rate something very safe that's pretty much guaranteed where you're not going to lose money. So the Fidelity Government Money Market Fund, SPAXX, pays 3.98%. It's been roughly about 4% for a year or so. And that can go up or down, but right now it's around 4%. If we look at the iShares 0 to 3 month Treasury bond ETF, SGOV has a 30-day yield of 4.24%, so a little bit higher than SPAXX. And if we look at the WisdomTree USFR floating rate Treasury fund, the 30-day SEC yield 4.29%. So I'm going to say roughly 4% is the risk-free rate. So if I do a bank bonus, I'm looking to at least make this plus some extra for the time and effort. So I'm looking for a higher return than the risk-free rate and possibly a higher return than the stock market. But the amount of the return is also important because I don't want to waste a whole bunch of time and only get $50. So for me, I think my cutoff is probably at least $200. So I need at least $200 or I probably won't do any of these deals. Now, a high dollar amount return by itself isn't that useful. If it requires a huge amount of money and it ends up being less than the stock market returns or less than the risk-free rate. For example, this Chase private client, you can earn up to $3,000 with a checking account. Now, at the low amount here, you earn $1,000 when you deposit $150,000 to $249,000. So that's an extreme amount of money only to earn $1,000. This is way more money than I can do. But the deal here is you not only have to have a lot of money invested to get $1,000, but you have to meet in branch. So you have to waste time meeting someone in branch. That's a time waster. And you have to maintain the money for 90 days. So that's 3 months. So that's not very good. And if we actually do the math on this, $1,000 divided by $150,000, that's not even 1%. That's not even 1%. 1% would be $1,500. And that would be if you held the money there for a whole year. So they're only going to give you a bonus within 90 days. So this one to me is not worth it. And unless they can offer a really special high rate, it's not worth it for me. This is a hard pass. Likewise, the Capital One 360 Performance Savings, you can earn up to $1,500, but it requires $20,000. $20,000 is a lot, and it has to be held for 90 days, and that's not it. So to get the $1,500, if we look here, you have to put in $100,000 plus to get $1,500. So I'm going to look at the $300 one. That's $20,000, which is still a lot of money. You have to hold the money for 90 days. So that if we do the math on that, that's 300 divided by 20,000. That's 0.015%. Now, if we sort of annualize this and we figured if we did everything perfectly and we could get a deal, we could do a deal like this 4 times a year. But that's not realistic because the deals don't come along perfectly. So you're probably going to have a few months where no deals are done. So I'm going to say that we could do a deal like this 3 times a year. So that leaves 3 months left over where the money's just sitting in a money market account or SGOV or something like that. So even when we factor that, it's only 0.045%. So roughly the same as what we would get with SGOV, but the money's going to be tied up during that period of time. So I definitely don't like this one. This one is definitely not attractive. Now let's look at some of the good deals. Wells Fargo has a $400 new checking customer bonus. If you get the Val Pack coupons in the mail, I've seen this as high as $425. Now this one requires that you open a everyday checking account and make $3,000 in qualifying direct deposits within 90 days. And you don't have to keep the money there. You could actually pull the direct deposit out. So it could only be there so you can pull the direct deposit amounts after they've settled and put it in a higher yield account like SGOV or Fidelity SPAXX. With this one, you have to have a $1,500 minimum balance or you just continue to make at least $500 in direct deposits a month, and then you won't get charged a fee. So if we do the math on this, it's 400 divided by 3,000, so 13%. And that's already a pretty good return. That's if we held it the whole year. But the fact of the matter is, the money's only going to have to be in there probably 5 days at most. And that's assuming you're direct depositing every month for 3 months for a day or so at a time. Even if we held the 3,000 there for the whole 90 days, and we could do this deal 3 times, so 13 times, so 0.13 times 3, that's a 39% annualized return. So that's way better than what you would get with the stock market on average. Likewise, US Bank has a good deal where you can get up to $450 on the Smartly checking account. But the thing about US Bank is to get the higher amount, you do have to have quite a bit of direct deposits, $8,000 or more. But it doesn't have to be made all at once. But you could have multiple direct deposits of, let's say, $2,000 until it adds up to $8,000. And it doesn't need to all be there at once. So you could move the same $2,000 back and forth. And there's no monthly maintenance fees for the first 2 months by having a $1,500 average daily balance or if you have monthly direct deposits totaling $1,500 or more, then you can avoid the fee. There's also the Chime deal. Now this one advertised was $540. I did the one, it was $460, and I did it through Inbox Dollars. But you can also go through Swag Bucks or My Points. Also, SoFi uses one of these websites also. So their best deal is also through one of these third parties. Here's the deal that I did with Inbox Dollars. So I signed up. I believe when I signed up, I received $10, and then I received $450 after that. And to cash out, there was a delay. The payout for Inbox Dollars is not super easy. For example, you see these multiple amounts of $100. Well, I did PayPal, and there's a small fee for that of 30 cents, but it only lets you do, even though I had $460, I could only do 2 of these at a time per day. So after I did $200 in PayPal, it said I reached the daily limit, and then I had to do the next 200 the next day, and then I did the last one so far as a gift card, and I still have a little bit left over. But when they actually sent the money to the PayPal, it was also several days. And when they sent the PayPal payments, they didn't just send it all at once. They did, I think it was $100, $100, and then another day, the next day, or a few days after, they did another 100 and another 100. So I believe they purposely slowed this down so that you don't get the money right away. But just be aware of that. But I'll put a link to my referral link where you can sign up through Inbox Dollars and get this deal. Right now, I believe this is $360. And it's worth mentioning, if you think all those companies like Inbox Dollars, My Points, and Swag Bucks are all different companies, they're all owned by the same parent company. So if we look here, Inbox Dollars, My Points, My Gift Card, Swag Bucks, Inbox Dollars, My Points, all the same company. So most of the time they seem to offer about the same amount, I think because it's the same parent company. Now, if you search for Chime in the search engine, it shows $460, but when you click on it, it doesn't show any information, so I think this may be expired. But if you click on offers and you scroll down, you'll see another offer for Chime that's $360. And it says here that you must click on this link between 7/31 and 8/1 and August 31st to earn. By the time you see this, they may be updated and you may see this, but right now this appears to be expired. You have to make 2 direct deposits of more than $200 within the first 30 days, and then it's paid within roughly 31 days. Now, SoFi Checking also has a deal, and I did this one through Rakuten. The great thing about this deal is you can receive the Rakuten bonus plus the $300 from SoFi. Now, Inbox Dollars also has a SoFi deal. well, $325. But if you actually click on it here, it says this reward cannot be combined with any other enrollment bonus, including referral rewards. So I don't believe SoFi is going to pay another $300 on top of this. So I did the Rakuten one as a result. Here's the deal for SoFi. You get up to 4% APY if you do direct deposits, and you get up to $300 from SoFi. And they have to receive a direct deposit of $5,000 or more within 25 days. And then the bonus is $300. Now, just a word of warning, don't screw this up like I did. So now I signed up through Rakuten, and there's a $125 bonus right now, but I didn't receive the Rakuten one. And the reason is the initial deposit when you open the account needs to be a minimum of $500. And that says the initial deposit. So the first deposit you make, you can't do $10 or $50 like I normally do. You've got to do at least $500. Or you could do your total direct deposit amount. Otherwise, you're not going to get this $125. But I'll put a link to my Rakuten. If you don't already have a Rakuten, you can sign up through my Rakuten and do this deal. Here you can see my Rakuten payout here. So when I did this, I believe it was $350 on SoFi. Not too bad though. Now I do like the Chime deal better. Now if it was a toss-up between Chime and SoFi, I would say go for the Chime one because it only requires 2 direct deposits of $200, which is way less than the $5,000 that SoFi requires. Now I did have problems. About a year ago I signed up and I entered the SMS code wrong a couple times, and they locked me out of the account for literally over a month, and I had to contact the Better Business Bureau and so on. And no matter what I did, they wouldn't unlock it until about after 30 days. So I'm not a big fan of Chime because of that. But Chime went public. They have a lot of IPO money, and I go where the bonus money is. And right now, Chime has a lot of money. Here's another one that I like that doesn't pay a whole lot, but I think it's super easy and it doesn't require hardly any money at all. It's Bask Bank. Bask Bank has a $300 bonus right now. There is the $100 Bask Internet Checking one. Now this one takes a little bit more work. This is the harder of the two. This requires a direct deposit of at least $3,000 and 10 or more monthly purchases, totaling a minimum of $500 using your Bask debit card during the reward period. And I believe you just do it one time and then you get $100. So that's not too bad. But this one here I like even better. This one only pays $50, but all you have to do is make 2 electronic bill center payments monthly from your Bask interest checking account, totaling a minimum of $50 during the reward period. So you could have one payment that pays for your credit card, $49, let's say. Then you could have another one for $1 that goes to your utility or something else, just as long as it's $50. And by the end of the month, they deposit $50. And they do that all the way through December, I believe. So the money almost pays for itself. So you don't need to put a whole lot more than $50. And if you're just doing $50 each month and you get $50 at the end of the month, it's like they're paying for your bills for free. Now here's another one. This is the Novo business checking account. This is the first business one. Now, is this a good deal, a bad deal, or sort of a mediocre deal? So this pays $300. It requires 2 debit card payments and holding a minimum deposit of $5,000 for 90 days. So that's quite a bit of money for only $300. So if we do the math on this one, it's 300 divided by 5,000, and the money has to stay there. You can't just take it out like it's a direct deposit. So that's 6%. Now, if it's held for a year, that would be 6%, but it only takes about 90 days. So let's assume that we could do this 3 times a year. Now, if we could do this 4 times a year, which is probably almost impossible because the deals don't end perfectly for the next one, that would be a 24% return pre-tax, which is pretty good. But in reality, if we could find another deal to replace this with, we could probably do this 3 times a year. So if we figure 0.06 times 3, that's an 18% return. Now that's pre-tax, it's not post-tax. A lot of people have complained that this one doesn't pay right away and you actually have to contact them to receive the payment, and they're picky about the link that you came from. So if you didn't come originally from this NerdWallet website, they may try to prevent you from receiving the bonus. So that's even more time and more work. And if it adds another few weeks, that makes the return even worse. And bank account bonuses are generally taxed as interest, which is ordinary income. And so it's not as attractive as stocks. For example, if we look at the 2025 federal income tax rates, it varies depending on the income, but let's just say for most people it's going to be roughly 20%, or at least maybe people that are doing bank bonus deals are going to be somewhere here. Somebody that's making $1 million is probably not going to be doing a bank bonus deal where you can only make maybe $5,000 a year. So I'm saying that's probably somewhere in the lower range here. That's just a guess. If we look at the qualified dividend income with Vanguard for last year, 2024, that's income. Qualified dividend is a dividend, I think it's over 60 days. If it's over 60 days, I believe it's a long-term capital gains rate, which is much less than the short-term rate. And if we look at some of the Vanguard S&P 500 funds, here's the value ETF, 96% tax efficient. The S&P 500 growth, 100% tax efficient. And if we look at the popular Vanguard S&P 500 ETF, 95.9% efficient. So not very much gets lost to taxes. And if we're holding this Vanguard S&P 500 and we're not selling it, we're not paying anything on those capital gains because there's no capital gains because we didn't sell it. So this is definitely more attractive. But if we get a bank bonus, it's taxed as income. Even if we sell after it's been over a year, even the higher end here with the higher amount of capital gains. So capital gains rates are way more favorable over interest or earnings. If we go back to the Novo example, this one, we estimated, let's say, an 18% annualized return. And that's us basically getting the money for this, finding another deal. We're doing quite a bit of work trying to look for deals. So 300 times 3, that's 900 that we would earn within about a 9-month period. And there's a 20% tax rate on that $900. So that's going to reduce it by $180. So then basically that 900 turns into only $720. And when we divide that into 5,000, that's about 14%, which is pretty close to the high end of the stock market. And it's a lot of work in order to basically just make slightly more than what the stock market would pay. And like I said, this is by no means guaranteed. And by the way, this is a fintech, so it doesn't have the direct FDIC coverage. And so there is some risk that you could actually lose money in this if you get some issue with the middleman like you did with Yada. So for me, I'm looking at really at least a 20% after-tax return in order to make it worth my while. But maybe you look at this differently and you look at this as like a boosted savings account and a lower risk than the stock market account. Just like a rental vacancy rate for a hotel or apartment, when these properties are not rented out, that's money that's not being made. When money is just sitting in an account looking for a deal, that's basically money that's making average. That's money that's not being used for deals. Now here's another deal, and I think I probably like at least some of this better than the Novo one. First of all, you don't have to have a business account with this one. This is a Chase account, and you have actually 3 options here. You've got expires October 15, 2025. Now you can do the Chase total check-in and receive $300. It requires a direct deposit within 90 days, or you can do the Chase savings. This one requires $15,000 and it only receives $200. And this money has to be held there for 90 days. So right away, I like the total checking and I don't like the Chase savings. Or you can do both the total checking and the savings. And it's not just $300 plus $200. They give you a extra $400 bonus. So this is the one that I like. I like this definitely much more than this. And this requires a direct deposit of at least $500 or more to avoid the monthly fee. And you have to keep the $15,000 for the savings there for 90 days. If we do the math on this, it's 900 divided by 15,000. So it's 6%. It's 6% if it were held 12 months, but it's only going to be held 3 months. So this would be basically 6% times 3, because you'd probably only get a deal like this 3 times a year. So that's 18% a year, which may not seem like a lot, but it's through Chase, which is direct FDIC insurance. And the nice thing is you're knocking out $15,000 on that 18%. So not too bad. But if this 15,000 is too much and you want a slightly higher percentage return, then the Chase total checking is the way to go for the $300. It requires way less money. The other business checking account bonuses we've got Wells Fargo has a $400 new business checking account. Open online or in branch. You only have to deposit $2,500. And the great thing about this one is it only requires a 60-day hold period. So that makes this one much better. So if we do the math on this one, it's 400 divided by 2,500. That would be 16% a year if we held it the whole year. But the fact of the matter is we're only going to hold it for 60 days. So if we could do a deal like this 4 times a year, that's a 64% return. So that's definitely way better than the stock market, even pre-tax. And there's no qualifying activities. So you don't have to do direct deposits. So you don't have to do any sort of debit payments or ACH transfers beyond the initial one. The second one that Wells Fargo has is a $825 bonus. This one requires $25,000 or more, and it's also a 60-day hold period. There's no debit card or qualifying activities required beyond the deposit. Now this one, if we actually work the numbers out, it's not as good as the first one. So if we take $825 divided by 25,000, that's 0.033. That's if we held it the whole year. Now, if we could do a deal like this 4 times, that's 13.2% pre-tax. So when we figure after tax, it's probably going to be low. It'll be below the stock market return. So I would pass on this one. Here's another one, Chase for Business. Let's look at the $300 one first. $300 with a minimum deposit of $2,000, and you only have to keep it there for 60 days. Now, this one does require 5 qualifying transactions within 90 days. Qualifying transactions are debit card purchases, quick deposit, ACH deposits, etc., bill pay. So if we do the math on this, it's 300 divided by 2,000. That's a 15% return if you held it all year. But let's say we could do this 4 times a year since it's only a 60-day hold. That's a 60% annualized return. So this deal is definitely worth it. Now the $500 one requires $10,000 in money. If we divide the 500 into 10,000, we get 5%. 5%, that's if we held it all year. If we could do a deal like this 4 times, that's a 20% return pre-tax. And so either one of these is probably acceptable. Now, here's another deal I did. This is for a business checking account. This one is called Mercury, and it doesn't look very good at the surface. You have to deposit $10,000 within the first 90 days, and you get $250 cash. And it's a fintech. It's not a bank, so there is a little bit of risk there. Now, I originally did this one, and I sort of messed it up. I put 5,000, and then I took out 5,000, and then I put in 5,000 again. But there was never 10,000 at one time in there. The only way this one gets triggered is $10,000 has to be in there at once. So you have to have at least $10,000 in this account. And I believe it was within a day or so that it was triggered, and I received the $250. So that's what I really like about this one. The great thing about this one is if the money only has to be in there a few days, that makes this return much better. And I'm actually using Mercury quite a bit. The feature that I really like about Mercury that I'm using quite a bit is the recipient direct deposit tool. It allows direct deposit payments to be sent directly to recipients such as people, companies, directly to the checking or savings account without any sort of initial verification. And the nice thing is it has this nice memo field, so you can enter in the information about the direct deposit, and you don't have to have the taxes withheld from this. You could do this at a later date or separately. So I definitely like this feature. So I'll put a link in the description where you can sign up. I did a video review of Mercury recently. I'll put a link to that above if you want to see the Mercury interface and the features. Now, Mercury was smart, and they moved away from this partner bank Evolve when they were having financial difficulties. So Mercury customers were never impacted like Yada Bank was. But it is a fintech, so there is still some risk over what a regular FDIC institution like Chase would have. But I also use Relay business checking account, and it has a similar feature where you can send direct deposits to other banks, but I just find that Mercury is a little bit easier to use. But if you have a business and you want to sign up with Mercury, I'll put a link down below. I don't believe you can get this deal anymore from the website, so you need somebody like me to refer you. And just a quick reminder, when you sign up with this, I didn't see the option for sole proprietorship. So I don't believe there is a checkbox for sole proprietorship when you sign up. So you may actually have to contact customer service if you have an issue with that. Thanks for watching. Please feel free to like and subscribe. And feel free to comment below. If you do bank bonus deals, what is your minimum percentage return or dollar amount? And do you look at bank bonuses like stock market returns or boosted money market returns? Feel free to comment below.